Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's January 16th. I'm Marin Katusa, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. We just got back from the Consumer Electronics Show, the CES, the largest technology conference in the world. It takes place every January, usually the second week in January in Las Vegas. And this was I'm pretty sure it's the seventh, maybe the eighth consecutive year of attending the event. And this year you had more than 180,000 people from over 150 countries that traveled to the event this year. So they had plenty to look at, believe me. I mean, this was a conference 7 years ago. It was just being held at the convention center, and then they expanded to the Sands Expo, and now it's in like 4 or 5 different hotels. And I mean, it's just insane how bigger and bigger and bigger this gets. And I don't know if that's a sign of the economy and maybe we're close to recession, but to put this in perspective, 2 years ago, we had about, I think it was like 3,300 companies. We're looking at 2016. And now there's 4,500 plus companies. So, this is the conference where they present their gadgets, the technology that they're going to launch for the year. So a lot of this stuff isn't available yet. And, it gets really exciting. There's new crazy products, lots of fun. Hopefully you follow me on Twitter at Frank Curzio. If not, take a look, because I really had great coverage on this. I'm not saying from me, just got really positive feedback because I'm sampling a lot of these devices, trying to give you guys new ideas. You're seeing a lot of live videos, live presentations of Samsung and their new robot, personal robot and stuff. And it was really cool getting a lot of good comments. And I really appreciate all the comments. And I love doing that, just giving you a real perspective of what I'm seeing at conferences like this, because everyone's going to have a different perspective. I mean, I'm an analyst looking for new ideas, trying to see what's going on. Is there any new trends or the existing trends? What are the new things coming out? What's going to make a difference? And you have a lot of companies there that are publicly traded that you could buy, not just here, but overseas and things like that. But every year that I go there, at least tons of ideas. Again, I'm an analyst. You're going to have marketers. You're going to have media and stuff like that. And the fact that I'm able to have a media badge gives me, a lot of access to companies where, I was playing, I'll get to this later, but a robot in ping pong, with hundreds of people watching me. And I was able to just get in and do it because they see the media badge, you're going to cover it, and there's, a lot of people online. And it wasn't me saying, oh, I just want to try this and have fun. I was really interested in the company. Actually, it's an amazing company that I'll talk about later on. But it's just really good perspective, especially a lot of live videos. And I got some positive feedback. They're still on there. So if you want to go back and look, probably about a good 30, 40, 50 posts of just different gadgets, different technologies, things that I saw for the first time that, will definitely either lead to an idea right away or allow you to explore into certain industries where you may come up with other ideas. And also, just as important, it shows you a couple of industries that you should avoid and stocks that you should avoid where, again, I'll cover that in a little while, but you get a really good perspective at this conference. And just to give you the quick scoop, I mean, 4,500 plus companies, for me, there was more than 3,000 that didn't need to be there. So there's a lot of clutter. There's a lot of stuff going on. It's overwhelming. But since, I've been to this conference so many years, I really know what to focus, what to look at, who to talk to, and, just have great contacts there. But it was a show where I found lots of new ideas, including one that I'm recommending Curzio Research Advisory tomorrow. So we delayed that issue because I was at the CES and I wanted to have full coverage there and give you guys a good perspective. And that issue is coming out tomorrow. So it's a $7 billion company that probably less than 0.01% of the people listening to this right now heard of. So it's down sharply after missing estimates last quarter. So it's priced really perfect. And most of that was due to weakness in China, which I've talked about in the past. I think it's going to change in terms of finding a solution on tariffs, since, it's impacting both of us. China much worse than us right now, but it is starting to impact us. And negotiations are going pretty well, at least with the U.S. and China right now, where they will come up to a solution this probably in the next month or so, because it just makes sense for both of us. And, both economies are going to get crushed if they do not. So again, I think that solution is going to happen this quarter, and a lot of China-based stocks. JD.com had an amazing booth there. just going over all the new technologies and drone delivery, big data analytics is a company who recommended it. And we stopped out. Most things in China got destroyed, and we stopped out for a loss, but it went down probably another 30-40% after that. So we limit our loss, which is good. But JD, you look at Alibaba, a lot of these companies that got smoked may be worth taking a look at, especially if we can come to resolution on China. And that's why I'm seeing this company, because it's amazing with AI technology, sensor technology, robotics technology. They have no debt. It's been around for over 70 years. And I know right now, Siri subscribers go, Frank, don't say anymore. Don't give the pick away. I won't. Trust me. It's a name I just learned about the very first time. I've been covering stocks, as you guys know, for over 2 decades. So for CRA members, Curzio Research Advisory subscribers, you're going to be getting that stock pick tomorrow. And also really true inside look at this year's CES, which was amazing. With that said, the CES celebrated its 50th anniversary last year. And this conference, which I explained, it's the biggest in the world, but it's known for having some of the greatest product launches or innovations over this time frame. For example, the first VCR in 1974 was launched at this event. The first personal computer in 1977. First portable TV camera in 1980. First GPS system for consumers, 1994. First satellite broadcast in 2001. You have the first 3G cellular network service introduced in 2004. The introduction of the iPhone in 2007 was at the CES. 3D printers, 2012. The first 4K television, an Apple Watch, 2015. Alexa was huge in 2017. Just giving you some examples there that I wrote down. So when you look at the CES, they actually say, found on innovation over the past 50 years. But I have to tell you, over the past 2 years, there's been little in terms of innovation. I mean, I'm talking about breakthrough technology, change the world, disruptive. You're not seeing that not only this year's show, last year's show as well. That's not a bad sign, right? I mean, we're basically, these conferences are more about improving or enhancing existing secular trends, which whether it's, autonomous vehicles, AI, big data analytics, wearables, IoT, which is, basic Internet of Things connectivity, smart homes, smart cities, 5G. It's all enhancing these things, making them better, which is okay. But for me, I would love to see more innovation. Like when the smartphone came out, when 3D printing came out, and how more and more companies are starting to use 3D printing. It's not on the level where you should go out and buy these stocks, but they have to get these in consumers' homes. And the last 2 years, I've seen that progress. I've seen make easy to use these things. The supplies aren't as hard to get. Just explaining how these products are. 3D printers are amazing. I mean, if you have the right products, you could have a 3D printer at one house and you have a 3D printer in China, and instead of them sending it to you, they could just put in schematics and build it, and your 3D printer is going to build whatever. If it's a little doll or whatever it is, it could be food, it could be a transplant of heart. I mean, it's an amazing industry, but it hasn't filtered into consumers yet, and that's when you're going to see that trend become huge and secular and monster, where you can make money in a lot of these stocks. We're not there yet. But that's what this year's CES and also last year's CES was, mostly about. So in my educational segment, I'm going to cover a lot of these trends, tell you, what trends I like, share some cool ideas with you of ideas you should buy. Also, you should short, again, based on what I saw personally, the 5 days I was at the CES. So that I'm going to cover my educational segment, which is coming up. Now, when it comes to podcasts, what I like to do is have one theme for each podcast, where this is technology. However, and just to elaborate a little bit more on that, if I'm talking about tech, I like to bring on a technology analyst or industry expert. Same goes for biotech, mining, financials. But I mentioned to you over the holidays, which actually I kind of hope you guys didn't really listen to the podcast during the holidays and you took your break and had fun with your family. But I said, if you get a chance, this is where you do your homework. I know you're with your families. I know you're coming off the holidays and you're just like, wow, I had a few days off and it was fun and football and stuff like that. I get it. But January is such a big month to find new ideas. That's why I mentioned over the holidays, where there's a ton going on right now. And I'm covering the CES, the JP Morgan Healthcare Conference. I have my contacts emailing me about things they saw there, which I'll share with you in future podcasts. And just like I share with them what I saw at the CES. You had the Vancouver Resource Investment Conference next week, which is mining. You have earnings season going on right now, right? So I'm going to cover all this stuff in future podcasts, especially in my newsletters. But I would love to limit this to just technology. However, there was a really big announcement made in the mining space this week. I know a lot of you own stocks in this industry. I know a lot of you have junior miners. You just have some exposure. And that deal was Newmont Mining, one of the largest producing companies in the world, gold producing companies, made an offer to purchase Goldcorp for close to $11 billion. It's going to create the biggest gold producer in the world. Now, this is more than just two industry leaders getting together to save money on synergies. There are tons of implications from this deal that are going to influence not just other major gold companies, but a lot of juniors. So I went out, I asked Marin Katusa, founder CEO of Katusa Research, one of the biggest industry insiders you know, to break down this deal, what it means to you, because again, I know a lot of you have exposure to this industry, even through my newsletters. You probably own junior mining companies, again, large caps, royalties, and this is a pretty big deal, again, that I believe, and so does Marin, is going to influence a lot of different segments within gold, whether it's producers, juniors, royalty companies. So we're going to Marin Katusa break down this deal for you. Also, next week is the Vancouver Resource Investment Conference, where I'm going to be flying to Vancouver to speak at this event. So again, January is like my busiest month. It's crazy, but this is where I find the best ideas. So Marin partnered with Cambridge a few years ago. Since then, it's been one of the must-attend mining conference of the year, someplace I love attending all the time, where a lot of great companies are in attendance. So the biggest names in the industry are going to be there: Rick Rule, Frank Holmes, our own Michael Alkin is going to be talking uranium. Amir Adnani, Ivan Biebeck, who's the chairman, director of Marin Resources, Brent Johnson from San Diego Capital. I'm going to try to have this guy on. I'm sure you haven't heard of him, but I was on a panel with him. We had minor disagreements, but it was respectful. But I really loved his opinion. He just provided good data, good analysis, and he said that he would love to come on my podcast. He's just really, really smart guy that I loved. And I was on a panel with him at the San Francisco Resource Conference a few months ago. So again, he said he would love to be a guest on the podcast. So he'll be a future guest. But what I love about this conference, most of the experts are on the floor. We're average investors, attendees. Get a lot of you listening to this have attended this conference. You could talk to them, ask them questions. They're in their booth. So it's a really cool format. And someone who attends conferences every year, even some of the large ones where you have the hedge fund managers and stuff like that, after they speak, you're never going to speak to these guys. They sneak out the back door. Maybe they'll do an interview at CNBC, after Irish Solar Congress or the Value Investing Congress, some of those major conferences where, it's hedge fund managers and stuff like that. Individual investors don't get a chance to talk to these people. This conference you do. And that's what makes it really cool, really personal. And that's why, even in a bear market, and, again, we have a nice acquisition here that just took place. Two of the leaders in the industry, merging, not really merging, but Newmont's a little bit bigger than Goldcorp. We have interest rates. Looks like we're going to stop raising interest rates, a favorable environment for gold. Put all that together into a conference where a lot of these stocks are down tremendously. And you're going to see a really, really good opportunity for investors attending this event. And that's why it's almost maxed and full right now. So, again, really cool format. But I'll let Marin share more details with you, including how you, my listeners, can get to this conference for free. And here's that interview with Marin right now. Marin Katusa, thanks so much for joining us again on the podcast.
Oh, it's a pleasure, Frank.
Thanks, man. And I want to jump right in. All right, there's a lot going on. You have the JP Morgan Healthcare Conference. You have the CES, Consumer Electronics Show I just attended. But in the middle of this, we have the VRIC conference, which is next week, which we'll get to in a minute. And then you have this major deal being announced where Newmont is making an offer to acquire Goldcorp for around a little over $10 billion. If this deal goes through, Newmont's going to be the largest gold producer in the world. It seems like it makes sense. But I wanted to get your thoughts on this deal, since it does have major implications. It's not just about this company, but from a producing standpoint for juniors as well. And I wanted to get someone who's an industry insider, knows the industry better than anyone else I know. I want to get your thoughts on this deal, which we're hearing is positive. But again, to me, it feels like there's a lot of implications that people aren't getting or talking about.
Let's take it from the standpoint of a Goldcorp shareholder. In 2011, this was a $50 stock. Today, before it's $12-13 a share now. So there's been some serious wealth destruction for a major gold producer. The new management team took over 3 years ago. The stock was a little over $25 a share, and it went all the way down to $9 a share. And they get a massive golden parachute exit, where the shareholders get a kick in the ass. So from a Goldcorp standpoint, the existing management team did not increase shareholder value. Granted, the market's been tough, but still, there's a few serious implications here. So I think for an existing Gold Corp shareholder, which I never was, and it's a tough one because the chairman and the founder of the company is a close friend of mine, and at least now they'll own about 1/3 of Newmont. And Newmont's a great management, it's a great position, strong balance sheet. They've already cleaned up all of their errors from a few years ago. But there's something that not one analyst is talking about, and Frank, I want to share with you and your audience. From an actual share standpoint, it's not obviously accretive to Newmont to do this deal. A lot of analysts said, well, the breakup value of the Gold Corp assets that they can sell. I say, to who? Who are they going to sell these non-core assets to? And I don't think they're going to get book value. Book value is what the management carry it on their balance sheet. And then there's what I call the street value, where guys like me and Ross Beatty will pay for these assets. Those are two very, very different ideas. For example, I'll give you the most recent big haircut was New Gold carried Mesquite on their books for over $330 million, or over 350, sorry. And Ross with Equinox came in and bought it for half of that. So general rule of thumb, when these big companies carry an asset that's non-core on their balance sheet, divide it by 2, and it'll probably sell for even less than that. So that's rule 1 thumb. But I actually think this is what I call the Trump effect, Frank, and no one's talking about this in the mining sector because of the nuts and bolts of how the accounting works. I believe with the tax cuts that Trump has put in and the changes to depreciation on the balance sheet, there are synergies and big benefits to the Newmont shareholders by taking over the Gold Corp. And we haven't seen yet that come through, but I think the Newmont team is thinking long term, and they're going to use the advantage of the new tax regime in the U.S. to be able to position themselves, and they are now at an advantage versus the Canadian companies. So you're going to see, I think, a lot more of the U.S. position companies take out the Canadians. And I've also talked about what's called the Commonwealth takeover, a term I coined, where the Australians trade at a big premium to the Canadians. And because of the Canadian political system, remember, the mining capital of the world is Canada. A lot of people don't know that, but it is. Especially for the junior world, it's Vancouver, where my office is. And because of the high tax structure, and now the Americans have the advantage on the tax system, and the Aussies, the Australian companies, have an advantage on their premium to their value, the Canadian companies are vulnerable now. So that's the big takeaway, and I think you're going to see more of this. And I've been writing about this for a while. We have a candidate list of who I think is going to get bought out over the next 12 months. So this is big news, but I think there's going to be more shakeups in the industry. And just like the oil patch, remember when we saw Exxon and Mobil merge and all of in the early 2000s, it kind of marked the bottom of the market. I think we're close for gold. I think there's still some, near-term downward pressure, but I think the big companies are starting to move because of the cost of production.
Now, what does this do for the juniors? Because when I see this, people are going to have their opinion on Newmont. The way I see it is,
it sucks. It sucks. I'll tell you exactly why. Because a lot of people are trying to position this as, oh, this is great news for the juniors. No, it's not. I'll tell you why. Everything's about supply and demand. There's going to be a whack load of non-core assets coming out of VRIC and Randgold merger, VRIC 2.0, and this Newmont Gold Corp or whatever, the new Newmont 2.0, there's going to be a lot of assets for sale. So there's going to be more capital that potentially would have gone to juniors that are going to go to funding the mid-tiers who are going to buy these out or whatever. It's all about supply and demand. The second issue is both Newmont and Gold Corp and VRIC used to own shares in these juniors, and now with the new management team consolidated, Randgold and the Newmont, they may necessarily not want that. So there's going to be a lot of paper for sale in these juniors that were funded by these majors, and who's going to buy that? Do you think I'm going to pay mark-to-market value? I don't believe mark-to-market. I think that's just a theoretical value for fund managers to bullshit their shareholders. So I've already been talking to bankers on both sides and saying, well, I'll maybe take that big block, but nowhere near the market price. I want a huge discount. So that's what you're going to see. The next leg to fall is you better know which juniors' shares are owned by these majors, just like what I call the trigger effect with fund managers who are getting redemptions and they have to sell the stock regardless if they like it or not. You're going to see that now happen over the next 3 to 4 or 5 months. It hasn't hit yet because the mergers are just starting, but that's the next leg to fall.
Now, what a good area to look at is mid-tier producers, where maybe these large companies are going to continue acquiring because their balance sheets are actually much stronger than they were. They restructured their debt, they cut a lot of their excess weight, they cut over the past 3-4 years, especially Newmont. Is it like your Mana Gold or maybe McEwen Mining or even bigger mid-tier producers? I mean, what are you looking at specifically in this industry that looks attractive? Is it royalty companies, or does this change your thesis on anything?
No, it doesn't change my thesis at all. Frank, you know how I'm one of the few in the industry who've been pretty cautious and bearish. To me, it starts with people, and then you look at the assets. Are they, in the lowest quartile of production? Is there significant upside? Or is this a district scale type of project? And more importantly, is this in a non-AK-47 region? Because I believe the world's really turning into a bipolarized geopolitical framework, so you better be careful where you are. So some of the companies you mentioned, I have no interest in being in those specific regions because, they're the one, people talk about peak gold or peak oil. I don't believe in that. But what I do believe in is peak stupidity in these certain regimes in governments, and they're always going to figure out a new way to steal value from these mining companies who've created value in these areas. So you better be super careful where are these assets, and you got to understand, how can I protect myself from what I call the AK-47 risk.
Now, you've been negative on the industry, and I know because we talk a lot, and you talked about that in your newsletter and at conferences. But yet you do have some ideas that you have invested in. I mean, specialized ideas that you've done pretty good on. Talk about that. This way, maybe for the listeners, keep them in mind, Marin. Where what specifically did you look at? Since you're bearish on the industry, but yet this is the industry that you cover, and you're able to find a few diamonds in the rough. Talk about those companies and what made you buy them compared to anything else in the industry.
So like I said, people, the project value, and is it trading at a big discount to its intrinsic value, right? So it's almost like you take a Warren Buffett or value investor view to this really cyclical sector. Then you got to understand the speculation and the macro perspective of how cyclical pricing is. But let's go back to my December issue. I put out, my tax loss victim list. These are companies that I would love to own, but I know that there's a bunch of redemptions happening in the market. There's a bunch of fund managers that piled in at higher prices and they're going to sell. And there was one stock that we bought a bundle of, and within a month it was up over 50%. We locked the gains, and you move on. So even though I like the team, I'm pretty vicious right now on management teams on locking gains because, I always remind the management teams, and Frank, my style, and a lot of people in the industry don't like my style, specifically management teams. They get paid a salary, they get paid options, they get paid a golden parachute, they get all their expenses paid, they get their rent paid. I don't get any of that, nor do my subscribers who buy the stock, and I can't reprice my shares. But management team have a great way of repricing options, and it's funny how no management team has ever given themselves a half 2-year option, but they expect me to buy 20% of their company with a half 2-year warrant at a huge premium to the market. So I remind themselves, and I'd say to them, hey guys, no problem. I will do that half 2-year warrant if you guys do half 2-year options at the same price as my warrants. It's funny how fast they capitulate. So the problem with the industry is there's not enough skin in the game across the board. So because I've been doing this for over 15 years and I have experience, I stick with the guys who have serious skin in the game, who know what they're doing, who go after world-class assets and have the ability to finance these. The one difference between mining or the digital world you mentioned, you were just at CES, is how capital expensive these projects are up front, even before you go into production. When it comes to drilling up a deposit, companies can spend $100 million. Look at the Pebble example. It's had $800 million in the project, and it's nowhere near going into production. Now, once it goes towards that step, which one day it will, that's going to be a $4 to $5 billion capex. But it'll work because it's a multi-generational, it will survive 3 or 4 cycles in the commodity price. But that's what I'm looking for, world-class assets in areas that the management team can create significant shareholder value, but you have to lock in the gain. So hence why I remind my subscribers about the Katusa free ride, and management teams hate it, but I remind the management teams that, hey, if the stock is down 50%, you still get paid. You still got your options. You still get your RSUs and DSUs. These are the soft compensation. And I think the exchange should bring in harder regimes. I refuse to invest in companies that do check swaps or any of that bullshit. I've never done that. And why should these, and it comes down to, Frank, we talk about it all the time. In the industry, there's so many newsletter writers that don't buy stock. And more importantly, stay away from these newsletter writers who do check swaps or get paid. What the hell is that about? So how does the exchange allow that? So they have to bring in more regulation. And that all happens through a bear market, and we'll get through it. Stick with the good people, pick right, sit tight. You will do very well.
Yeah, and to add to your point too, I was just looking at where David Garofalo was appointed chief executive president of Gold Corp in February 2016 is when he started. The stock was around 14, and now it's around $10. And they said he's going to make like $7 million on that deal, even though his stock and all the shareholders are down,
11.
More than
he gets a golden parachute of 11.
At 11. So we're looking at a 25% decline in the stock, and you're seeing a guy that's going to make $7 million while all the shareholders got crushed. And granted, it is the market, and the market's come down, but what, like personally, Marin, because what I see when I see a takeover like this is, I think when Exxon buys companies, when I won't say Microsoft because they're usually not good at buying companies, at least pre Nadella, but they look out 10 years from now, right? What's going to happen? They don't care about 2 years from now. And right now, based on what the experts are saying, when you listen to Rick Rule and even the Ross Beatties and you yourself, this is the worst. We're talking about a cyclical industry in its worst cyclical market in 40 years. And they're buying it at an absolute low, thinking maybe in 5 years, listen, this could be huge for us. 10 years, it's going to be monstrous for us. But what ticks me off isn't Gold Corp thinking that as well? I just felt like they're selling out at an extremely low price, which you think is kind of expensive here. And I can grant the where the market is, but it's just amazing. Like a new management team came in February 2016, and the goal was to sell this company at 25% lower. And this is after the premium they're getting,
Frank, if you go back, a bit hobby of mine, because I wrote a book, I'm kind of a historian in the resource sector. So if you go back to the mid-'90s to the early 2000s, we saw this happen 20 years ago. And let me explain why. So when you had Placer Dome, Placer was a great mining company in Canada. Ironically, most of Barrick's best assets were from Placer. But Dome Mining was a gold company. Placer was one of the real leaders in the porphyry copper gold development, open pit bulk tonnage. But Dome Mining was a gold company that traded at a premium to the copper company. So a bunch of bankers from Toronto went to Vancouver and said, hey, let's merge this company, Placer Dome, and they literally shit the bed. Like a bunch of accountants took over, gave themselves bonuses, very similar to what you're seeing with what happened with Gold Corp today. And then boom, Barrick took it out. But then there's so many other, Echo Bay, Round Mountain. You look how Kinross was created, the wealth destruction of Kinross. You look at so many of these companies back in the day that had huge potential and really just fizzled out and consolidated. That's a natural cyclical thing, and it fits part of my concept of, on my website, there's a free ebook called The Boom, the Bust, and the Echo. We're in the echo phase where you see a lot of this consolidation happen in the sector. So this is nothing new to the resource sector. But moving forward, it's about, who on the board. So much about the mining sector has become about corporate governance. It's been about like the social license. Okay, what the hell is a social license, and who actually issues the social license? The governments can't figure out who issues the social license. Everyone has the right to a social license. And that's what you're seeing in certain regions. They're fast-tracking production in certain metals because they're not getting hung up on legalities where the lawyers are really getting involved in blocking things. For example, in Canada, a pipeline company spent almost $1 billion to get the pipeline approved. The government approved the pipeline, And it took about 400 protesters and the NGOs to change all that and block the development because of this social license. But I keep asking the governments, who issues the social license? So there's a lot of deep philosophical issues in the mining sector right now that are really screwing things up. And if you take the Goldcorp example for, like, you know, when they tried to do the hostile on my buddy Sean Rosen's deal with Cisco Mining for the Malartic mine, and they lost out on that from the Yamana and Agnico COVID, they brought in a new management team, and they did a different direction. You know, they bought Kaminak for $450 million. They bought Exeter for a couple of $100 million. They invested $100 million into juniors, but they didn't do any major, you know, true value, increase the bottom line. They were investing in the future, and that showed that it didn't work out, right? So sometimes a lot of these management teams look to better times, but what happens if over the next 3 years gold goes to $1,000 US? How do they position themselves for that? And what you found out is a lot of management teams are too optimistic because they follow the bankers and this corporate governance that thinks that gold, because for example, Frank, they take the analysis of 40 or 30 analysts from the investment banks. Well, when's the last time an investment bank was right on the spot price? They have no skin in the game. They're here to sell you something. Why not take a 25% or 30% discount to the consensus price, do your budget to that, and worry about survival today? Because $1,500 gold, don't worry, there's no shortage of gold whatsoever. There is no peak gold, okay? There's peak gold at $1,000 gold, and that's why you want to stick with who's going to make money at $1,000 gold. And when you look at the really smart guys who've survived and made billions of dollars, whether it's Ross Beatty or Lucas Lundin, Robert Freeland, they understand that. They're all about make sure you have assets that work in the lowest quartile, but have big production that the majors will want. $1,500 gold will take care of itself. It's about increasing your shareholder value at a bad market, not looking forward. And that was the problem with Goldcorp and so many of these companies that have been consolidated, and the whole industry in itself. You know, Goldman Sachs came out and said, oh, you know, we're bullish on gold. Well, when's the last time they've been right? When's the last time Goldman Sachs made you money, Frank? Do you really think they're going to call up Marin Katusa or Frank Curzio and say, hey, this is what we think you should do, before their internal office and bankers, you know, these financial vampires take their flesh of meat?
Yeah, no, it's definitely a good point. And I've spoken numerous times about investment bank. I just saw investment bank today come out with, they covered the whole software industry, which is like 15 stocks, and every one of them either was downgraded or upgraded at the same time. I'm like, at the same time, you're going to downgrade and upgrade all of them. Maybe it was a different analyst that covered them. I don't know, but it's just, and the fact that not one analyst, not one of the 43 covering Apple, the biggest company in the world, went down 35% from its highs. Not one of them had a sell rating on it. Why? Because, you know, when they raise money or they offer bonds, oh my God, you don't want to have a sell on the biggest company in the world that has, you know, hundreds of billions of dollars and looking to raise more money. You're an idiot for doing that for your investment bank. But there is. It's just, if you look at it and the bias behind it, it's not about the investors. It's about, you know, their investment fees. They're companies and they generate fees, which is, yeah. So I won't go on a rant with that. Now, I want to move on because I'm going to see you next week. It's at the VRIC conference, Vancouver Resource Investment Conference, which you partnered with Cambridge. Talk about that. How long ago did you partner with them? What are the differences you see? I know I don't want to explain it myself. I want you to explain it, because this is one of the conferences I look forward to attending every year because of the quality of companies, the fact that you could talk, even individual investors could talk to any expert they want who are walking the floor and answering questions. It's just a really cool conference compared to the high-end ones and that you go to where you see these hedge fund managers and they sneak out the back door. You never get to talk to them. This is more very personal for individual investors, and it seems like a pretty good time with, you know, look, gold's been in a bear market forever. You're seeing a couple of deals take place. You're seeing more favorable market conditions on the macro perspective, where it looks like we're going to stop raising rates, at least in 2019. You know, talk about, you know, this conference, what your expectations are, and what made you like partner with Cambridge? What made you do this?
Okay, so the first question, what made me, I've been speaking at the Cambridge show for over 15 years. And when Jay took over from his father, Joe Martin, Joe used to be my, you know, the pre-Marin surgery. Joe was one of the heavyweights in the drinking in the sector, and he was my drinking buddy at the conferences. So Joe and I always had a special relationship. And in 2015, when Jay took over, it was a really tough market. And I literally just ran into them on the corner of the street. and Sprott merged up with the Stansberry guys to create a conference because there wasn't much money in the industry. Essentially what happened was companies had to pick and choose which conference they were going to go to. And the Martins were pretty upset because, they had a big conference and, they weren't able to sell the booths for the companies to come, and, it's an expensive venture. And I said, guys, come to my office. I got an idea. You guys have been doing this for 30 years. You cannot fold shop because of a bad market. And I guess it was in the best interest of the Sprott-Stansberry Alliance for that show to shut down. And me being me, I saw an opportunity. So we merged up and became partners on VRIC. And I knew that I could bring up, really juice up the roster by bringing in, the heavyweight speakers, the Ross Beatties, the Lucases, all the different, Rob McEwen. You've seen David Lowell, Jim O'Rourke, Roman Schlenka, Ron Netoliski, all these Hall of Famers who've been there and seen that. And if you came to the first show, which you spoke at, Frank, if you just bought any one of the companies, if you created an average of the companies that I chose to speak, you'd be up 7 times a year later. I think we're at that moment in the market. It really feels to me right now that we're near that October 2015 price. And the show is the largest of its kind in the world. We're going to have over 9,000 people over 2 days. We've taken the maximum square footage of the biggest convention center in Vancouver, which happens to be the second largest convention center in Canada. So you're going to have over 100 companies exhibiting, and you're going to have guys like Rob McEwen and Clive Johnson and you name it, walking around. And part of the rule is if you're going to speak at the show, you got to walk the booths and just hang out and see. And like you met Rob McEwen at the show, and he just stands there at his booth. So it's not like, oh, you have to be a newsletter writer, you have to be a big fund manager to have access to these people. No, you just have to make an effort and walk up to the booth, and you can go talk to a Doug Casey or a Ross Beatty or a Lucas Lundin or a Rick Rule, whoever, or even a Frank Curzio. You're walking around the show and people come up to you and you talk. More importantly, you're going to see the main investment bankers hovering around, and you can figure out quite quickly who's who in the zoo, and the stockbrokers and the fund managers. And then we brought all that in by bringing in what's called the deal room. So if you're a fund manager listening or a family office, sign up to the deal room, and then you can have one-on-ones with any of the individuals or companies presenting in a kind of a one-on-one speed dating style thing for your own portfolio. So it's a one-stop shop for the conference. I enjoy doing it, Frank, for one reason. When I started out, when I was still a high school teacher at 22 years old, I'd sit in the back and be like, okay, this guy Rick Rule's talking about warrants and how he did this deal with Ross at 25 cents in Pan American. I sit there going, holy crap, in the CFA textbook, they don't even talk about warrants. Like, how do I do that? And I said, if I ever get a chance to be one of the players in the industry, I want to create a show that I'd want to go to so people can actually get in on financing. And I'll say, hey, there's a company I'm financing here. If you like it, I don't make any finder's fees off it. I get no financial benefit from it. I'm putting money in this. Remember when we did the Northern Dynasty? I go, hey, I'm putting millions of dollars into this. Go to the booth, and if you like it, put your name down and get to know management, see if it's good for you. That worked out really well for everybody in that financing. So that's what the show's about for me. I love doing it, and you get some, like my crew, a lot of my people in the industry, whether it's guys like Grant Williams, who bring he's not a technical guy, but he brings a really cool, entertaining macro view of the gold market. So I bring in different characters to the show to make it fun, informational, but yet entertaining. Because, look, I know we're competing with your family and football and, everyday life, so we have to make it worthwhile. And you've been to it. I think you think it's worthwhile.
No, I think it's awesome because you don't have as many geologists speaking, so it's a lot of fun.
Well, that was the other thing. If a geologist is going to talk, he's got to. I cap it. That's actually how we start the show. Is Frank Holmes gave me this idea of Pichakucha, where you're allowed 20 slides and 20 seconds per slide, because you'd be shocked how a geologist can talk for an hour on a piece of paper that looks like my daughter colored it with crayons. And I get the technicality. My wife's a geologist. I've been in the industry. I did all the geology courses in university. But my point is they forget who their audience is. And geologists are the absolute worst at that. And there are lots of geologists that I do bring up, like David Lowell or Roman Schlenka, Ron Netoliski. A lot of people don't know that Ross Beatty's actually a geologist. is also a lawyer. So that's a real interesting combo. But, Lucas Lundine's a geologist also. But he doesn't sit there and bore the crap out of you with technical mumbo jumbo to prove to you that he's not just he couldn't do math or organic chemistry, that he was rocks for jocks. So that's kind of, I make sure it's entertaining, and also, we have the debates between, Jim Rickards and Peter Schiff, and I think I'm one of the few moderators that I can actually put Peter Schiff in line, because I don't think I've ever met anyone who likes a microphone better than that guy. So it's important to, keep it respectful but yet entertaining.
Yeah, and that's no disrespect to geologists, who we both know a lot, who are brilliant people, but sometimes they just get lost with, you said it brilliantly, they don't know the audience when they talk about rocks and just, grades and stuff. And sometimes it gets a little too deep and they go on when, people would just want to know, what's the story here? Why is it such a big deal? How can I make money on the stock? And I'm glad that, not only you realize that, but there is an entertainment value to a lot of these conferences, and that's important. So, two things. The first I'm going to say, is there going to be like an entertainment thing where you might sing for us at the end of the conference, I'm hearing, or is that just a rumor?
Yeah, until I lose some weight, I'm not going to be able to fit in those leather pants. So that was 20 years ago of fun.
I'm
but
still going to bring that up.
There is one thing that we're the only conference that I know of in the resource sector. I don't know if the tech sector does this, but I open up a bar for everybody in the conference. And I bring in, when we do the Hall of Fame reception, and, it was one of the funniest things when Doug Casey got into the Hall of Fame. I was the moderator, and you had Frank Holmes and Frank Juster up there. And not only are they getting juiced on stage with the flow of drinks coming, but the audience was too. And that started from 4 to 5, and it was supposed to end at 5. Everybody stuck around till 7:30, and literally less than 5%. There was about 2,500 people in the room. I don't even want to know what the bar tab was there, but we just keep the drinks going, and it's about having fun. Life's too short to take yourself too serious. We're here to make money. We want to work with good people. It's a risky sector, but I think it's a good time to pick with the right people, and the show's a fun thing to do.
And last thing here, which is a cool question, is do you see anything like a specific name? Because people love ideas, and if you don't want to give it, it's fine. But like a Northern Dynasty that we saw, that was just priced as if the stock was completely dead. And when we went to go see the site, we said, wow, this thing should not be trading at 35, 40 cents. It did go as high as $3, which exceeded my target by more than $1. Is there any stocks that you're looking at that you're just saying, especially with this market, where, wow, this makes so much sense? Because the one thing I love, Marin, I know you love, is when we got back, everybody thought we were nuts. And I love when everyone's on the opposite side of that, because they're like, there's too much regulation risk, you're crazy. And what we saw being priced in and knowing, possible Trump coming in as president and stuff like that, it worked out. I just wonder if there's any other like individual stocks that you're looking at as a Northern Dynasty type that you're saying, wow, this thing is just so mispriced here, based on their assets and the management team.
One that I haven't bought yet, or one I'm looking at but I want to buy.
Yeah, maybe either or. I don't want you to give
already.
anything away that you got to give to your paid subscribers, but just a couple things maybe that you're interested in looking at the conference and talking more to the management teams.
There's a couple of royalty companies that I think they're a little bit pricey for me. I'd like to see them come down a bit, because royalty companies trade at a premium to NAV. I think what Pan American did, buying out Tahoe, was really, really smart, and I think they're going to sell off some of the non-core assets, like the Lakeshore assets that Tahoe bought. But Ross is the chairman there, and I told him, I love the company, but I'm waiting for a major market correction to buy that one. And market corrections always come. You just got to be patient. I know it's tough and it's discipline to do that. And I'll give you one that is in my newsletter, because Frank, I do like you, believe it or not. But for your audience to do some research on that, I think is such a contrarian play. And everyone, when I say, what are you doing? And I put millions in on this personally. And I just think the management team is top tier. Ira runs this company called Lucara, and it pays a dividend, and yet the balance sheet is impeccable. No debt. And yet, because of 3 or 4 fund managers that loved the story 3 years ago, who got fired, and now their fund changes, and when a new fund manager comes in, the trigger effect happens. I think it's at an incredible price that I'm looking at buying even more. I follow it in my newsletter, and we haven't yet pulled the trigger on the next tranche because I'm just trying to wait for the market, because I am very conservative on the market. And Frank, if you've been a subscriber of mine, you know what I've been talking about, the U.S. dollar and the copper. And look, I'm a copper guy. I've been one of the founders of the third largest producing copper company in Canada. I've been on the board for 13 years, so I understand the sector well. I just think that there's going to be some incredible opportunities in the next 12 months if you have cash. Right now, I guess the last thing I would say is cash is king. And it's kind of crazy because in the gold sector, which I'm well known for, it's kind of like I'm a bad guy saying that. And the gold bugs and even the management teams think I'm nuts. But it's not about being lucky. It's being prepared when the opportunity arises. And you can't pull the trigger in a cheap market if you're invested. So don't go and buy, if you've got $25,000 or $50,000 to buy some stock, don't buy $25,000 of it all on the Monday morning because you feel good and you feel like a stud that day. Buy it in tranches. Take your time. Buy 25% today. Watch it. See how, the share price. See how it's going. Look at their balance sheet. Get to know management. It's kind of like it's shocking to me, Frank, how many family members I have that spend more time on fantasy sports than their own portfolio. And I sit there and I guess, I look at even my wife's friends and some of these people, like just in our social network, people I know, and they know so much stats about these athletes. And I'm like, but you don't, even if you're right, what do you get out of that other than like cheering for someone else? Why not do that with your own portfolio and think of the mining sector as like this fantasy sports thing, but you can get really rich if you pick right and get to know the right people in the sector. And why cheer for some other guy who is rich throwing a football when you can throw the football to yourself and become rich?
Nah, it definitely makes sense, and that's good advice. And we'll leave it there because I usually like to keep these at 20 minutes, and this is like 30, 35 minutes because our conversations just flow. I love that, when you speak to Marin, you're not speaking to institutions, you're speaking to individual investors where they can understand you. And I really appreciate that. I know they appreciate that, and you always offer ideas for my clients and subscribers. But with that said, I'm looking forward to seeing you next week, speaking at the event. Hopefully you have 5 minutes for me because I know everybody's going to be all over you since you are a partner and it's going to be really crazy. But I definitely
I always got time for you, buddy. I always got time for you.
No, I hear you. We always do lunch or whatever. So hopefully we'll grab lunch or dinner. But I'll see you in a couple of weeks. And thanks so much for coming on. And I'm looking forward to the conference, bud.
All right, buddy. Take care.
All right, guys. There's always great stuff from Marin. Always has, strong personality. Some people like it, some people don't. I like it. They should always know where he stands. Right? He's never on a fence about anything. He's going to give you his opinion. And if that differs from a lot of people out there, they get pissed off, and I understand. But you always know where he stands. And sometimes I can't say that for all the other analysts where, they're bullish and bearish, depend on, what the market's doing. If it's up, usually they're bullish. And if it's down, they're bearish. Yeah, and they come on and they recommend stocks, and there's no really accountability, especially when you're seeing these guys on TV where, Marin's on this podcast. He talks about his winners, talks about his losers. And I respect that a lot. Again, just this is someone that's helped me become an insider in the resource industry, that's introduced me to some of the biggest players in there. Rick Rule, Jeff Phillips have also helped out that just, paved that way for me. And it's something I really appreciate. And, hopefully you appreciate it because he always comes up with new ideas and shares new ideas and gives his honest opinion. But, for this conference, if you're attending or in the neighborhood in Vancouver, to get in for free, which, is available to all my listeners, I'm going to be providing a link. Let me know. Just send me an email, frankcurzioresearch.com, because I don't have the link yet. I'm going to get it pretty much in a few hours after this thing goes live. But if you're interested if you're attending that conference, make sure you do it through the link because then you'll get them for free. Again, I'm not looking to, have most emails and stuff like that. You're not going to get sent anything or anything. It's just something I provide for you guys because, I like to share all my resources with you and help you guys make money. And, and hopefully that leads to more subscriptions for our products and stuff like that. But, this is something that's absolutely for free, no strings attached or whatever. So if you're going to attend it, don't pay to get in. You could, use this link and get in for free. Again, if you're interested and you want that link, just send me an email, frankcurzioresearch.com, and I'll provide it for you. I'll try to put up on our website, but again, I'm going to get it a little bit after this podcast publishes. Now, I am going to be speaking at this event, the VRIC. My speech is going to be a little different because I'm going to be talking about digital securities. including our security token offering, Curzio Equity Owners, which is just weeks away from launching. So I'm going to send you all the details, including our white paper, the week of the launch. So, I mean, it's about 2 weeks away, maybe even sooner. So we're just going through, just the minor things, design and stuff like that, and getting ready. And we want to make sure we're learning to use the platform. And, we want to have our questions. This way, we want to really sample everything before investors actually go on it. This way, we're able to answer all your questions and make it easy and provide, FAQ and stuff like that for you, and just maybe videos to make it very easy to, for people who are interested in investing in this. But in that speech, I'm going to break down the entire digital securities industry. I'm going to tell the audience why this is a multi-trillion-dollar trend that few people know about or even positioning themselves for. So I talked earlier about how the CES lacked innovation, at least over the past few years. For me, digital securities, this is going to be one of the most innovative trends disrupting numerous industries. I'm talking about disrupting investment banking, real estate, brokers, royalty companies, exchanges. I mean, it's here. It's happening now. More and more STOs are being launched. You're going to see more exchanges come online, especially in the next 6 months. And you're going to see these things trade just like stocks or similar to stocks, where you're going to have equity stakes. Some of these things are going to pay a dividend. They're going to be existing companies, not companies written on a cocktail paper napkin where you don't even have a stake in, like the ICOs. But this is an amazing industry that's really, really attracting some of the biggest players on Wall Street. And they're waiting to get in as soon as regulation comes, not really for STOs, but for the exchanges. They want to make sure the exchanges are regulated. They know everybody on these platforms. This way, the IRS knows, just like they know as a brokerage account, right? This way, if you make money in your brokerage account, you're going to have to pay taxes on it. Same with this. They want the same rules. And I know when you see crypto and you're like, well, I wish it was decentralized, not regular. You need regulation. People need to know their money is safe. It's not going to be stolen. There's nothing you can do about it. And that's how something like this will go viral. It's a way to eliminate the middleman when it comes to financing. It's an unbelievable trend. Again, something that's the most innovative thing I've seen since the creation of the internet. You're talking to someone who's covered cloud, big data analytics, IoT, shale oil, and all these major trends. I truly believe this is going to be a much, much bigger trend. And you say, well, $1 trillion market, there's over $250 trillion in assets that could be tokenized. If 1% decide to tokenize, which we're seeing out there, we're seeing famous art, we're seeing famous hotels. We just saw a company trading on the NASDAQ that tokenized one of its assets. It's been trading on NASDAQ for 10 years, a biotech company, one of its leading drug candidates for cancer. They tokenized that lead drug candidate. You're going to see that happen a lot in biotech and mining. Instead of buying the whole entire asset, you could basically tokenize just your best assets. That's something that I'm really interested in, owning the best assets of a company and not just all the garbage, which comes along with everything. Yeah, that's pretty cool. And you're going to see that it's happening right now. You're going to see it happen on a much wider scale, especially over the next 6 months and next year. And that's why we're partnering with some of the best people. That's what my speech is going to be about. It should be pretty cool. If you're there, please attend the speech. I'm going to be walking around. Feel free to come up with me. I love talking to you guys. I love you guys, listeners, subscribers, everybody. So, I'll be around the halls. Feel free to stop by, say hi. Want to catch the speech? I'll probably have a link to it within, I'd say, about 5 days. And I'm going to post on our website. And I'll send that out to everybody as well. If you're interested, again, you could, email me anytime, frankcurzioresearch.com. Now, let's get to my educational segment. So I'm going to break down some of the biggest trends I saw at the CES, winners, losers, everything. And you can start with 5G. So 5G was one of the biggest themes this year. Also last year, much more this year. But the 5G cycle works like this. You need to create the infrastructure, which is, towers and stuff like that. All right, check, right? They did that. A lot of tower companies. You need to, and you talk about, lots of different names in the tower companies, but you also need the wireless carriers to provide 5G coverage, right? So you have the AT&Ts, the Verizon's, T-Mobile, Sprints, right? Check. They're doing that. You also need semiconductors to make the parts that allow phones to have 5G, right? Broadcom, Skyworks. I mean, there's tons of names there to chip companies. All right, check. They've done that. And then what you have is the last part is the smartphone companies. Because now they incorporate these parts into the next generation of phones and they start selling them with 5G capability, which Apple and Samsung are going to do when they launch their next generation of phones, which for Samsung is coming up not too long from now, and Apple is usually September when they launch. So the 5G trend is here finally. It hasn't been here. People have been talking about it. Get American Tower and things like that. He tries to make money off of, the early stage, and, I don't think those companies have performed so well, especially over the past few months with the market coming down. But 5G is finally here. So how do you make money off of it? The best players, Qualcomm, Intel. And you can buy some of those tower companies. American Tower, Crown Castle, SBA Communications, I think are the leaders. I'd stay away from the semi names since they're not fully leveraged to 5G, right? So, they're in other areas of the market. You could probably say that about Intel and Qualcomm, but, they're into much bigger growth markets. But many of the smaller chip companies provide parts for smartphones. And, hey, we just have Samsung told you that last week, seeing slower demand. Apple obviously is telling you slower demand. More important, I've been highlighting this 6 months ago because we recommend Taiwan Semiconductor, who is the leading indicator on everything because they produce basically all the chips for all these companies, telling you 6 months ago that they're seeing a huge slowdown in smartphones, which they were dead right. Took 6 months later, but you had Samsung won, Apple won. So when you have exposure to all different markets, you're not going to benefit that much from 5G when a lot of your exposure is just to other parts that go in smartphones as well. But I do like Intel and Qualcomm as plays off of this, even though Intel did kind of a poor job this year at the CES. They had, not that it's a negative for the stock. I know what they were trying to do. So, basically they come out with say, Intel inside, right? So now they came out with their theme is Intel outside. So they're showing like autonomous vehicles. They're showing agriculture. They're showing just plants growing, different things, how Intel impacts so many things outside instead of inside. And I kind of felt like, I saw a lot of that stuff already. I know Intel does that, but still, I think, they displayed 5G and AI and stuff like that. And those are two major markets for them. And, 7 nanometer, 10 nanometer chips and stuff like that, and making sure they get those launched on time. But I didn't really like the display compared to last year where you saw all these trends up front, which is really cool, where, we kind of know about autonomous vehicles. Now you're putting yourself into, hundreds of displays with car companies displaying the same technology and stuff. So I didn't think they did a great job this year. Again, that's not negative for the stock, but they are in the major trends, secular trends finally over the past 2-3 years. And that's starting to account for more and more of their overall revenue as a percentage of revenue, which, that's what you want. That's where IBM is going. IBM did a fantastic job, too, at this conference. They had a great presence, and they have a leaderboard there saying, the most talked about companies, and they had the top 10 there, and I think IBM was 6th or 7th. I've never seen IBM on that list before. But just AI capabilities, they had 2 different presidents, I think, at booths, one on the main floor and one at the, I'm pretty sure they had one in the Sands Expo as well. But I was very impressed with IBM and just, having the right people in the booths, talking to them about the new technology, the excitement. It was really cool that IBM did a great job. AI, another major trend. Tons of companies involved in this, which is basically machine learning. But, guys, it's kind of scary. I mean, if you're not familiar with AI, it's the machines are basically learning about you. And while so many of us love to be spontaneous, love to do things off the cuff, we're not, right? We all do the same things each day. Every single day. We're more predictable than anything. I mean, we eat breakfast at the same time, drink coffee at the same time, go to the bathroom at the same time. You work the same hours. You go on vacation around the same time with your family. You buy the same products every week, especially, the foods. You like to eat the same foods. You take your kids to whatever events that they're doing or, chess tournaments for my daughters or soccer and stuff like that or dance, at the same times every week. I mean, we're very, very predictable. And AI is able to track your events, make things, the purpose to make things easier for you to predict, which is cool. If you have Google in their emails, if you notice it's finished typing your sentences now. AI, because it's learning from you, which is cool, but it's also dangerous if the data falls into the wrong hands, right? Because they're going to know everything that you do, kind of what we saw with Facebook, where people like to post everything about themselves. I just think it's funny how they're so surprised that Facebook is basically selling this data to everybody. But you're posting everything you do, where you are right now. I'm checking in, what I like, you're hitting the like button, providing pictures of your kids at different places, just so much information you're giving people. What do you think they're going to do? They own that data, so it's just surprising to see how many people are upset. I mean, be upset at it, but you shouldn't be surprised that happened. Anyway, when you track all that data, it's much easier for marketers to target you, which is, multi-billion, if not trillion-dollar industry. I mean, every company markets, right? So what would you rather do? Market on a TV show where you don't know who's watching, or for me, market to people who bought newsletters over the past 3 years? Where do you think my return on investment is going to be better? So that's where the market's going, and AI is a big part of that. Intel, IBM, really, really great in this area as well. NVIDIA had a monster presence at the CES. New graphic cards, again, not just focused on gaming, but autos as well, along with big data analytics, cloud. You have Twilio, Micron, of course, the majors like Amazon, Microsoft, Google. I think Amazon was hands down the biggest winner at the CES. And last year, all the smart home devices and everything, and I'm talking, if not thousands, tens, over 10,000 devices. I mean, some of these companies are displaying like 50, 100 at a time. They were compatible with, the Apple Home, the Google Assistant, Alexa. That was last year. This year, when it came to smart homes, guys, and by the way, I'm going to say it low, Alexa, because I have an Alexa in my office that's actually going off right now, which is funny. But this year, everything was Alexa. It was no mention of Google or compatible with Google. No mention of, hey, you could use this with Apple. Everything was Alexa. Everything was compatible with it, which I thought was pretty amazing. And speaking of smartphones, the biggest winner I saw was Honeywell. And now they have simple, cool devices for smart homes. I talked to these guys in their booth. It was incredible. But they're compatible with, I would say, over 100 companies. What does that mean? Well, there's 50% of people that have at least one device in their smart home device. But when it goes to the second room, it's like just 20% in the U.S. So there's a massive market. Think about home builders and working with home builders to make your house smart. All the appliances are smart now. So all the lights are going to be smart. Everything's going to be smart, and they're all operating through Alexa. But when you look at Honeywell works with all other companies, which I think is a big deal because they might have better cameras than, and maybe better technology and just, a better platform in some areas and maybe not in other areas. So, if I decide to get a smart home and do 1 or 2 rooms, and then I decide, wow, Honeywell just came out with these great products, I can install them and everything's going to work together on that platform. To me, that was a big deal. You don't see that with all companies. That's why the smart home revolution didn't take off, even though since 2014, they've been talking about it. I said last year was the year. Now you have the hub where everything's compatible and they can work together, which is a big deal. Going into another winner was Procter & Gamble. I know, right? Isn't that crazy? The first time I think I saw them at the event, but I loved it. I mean, you're talking about a boring consumer home product company getting into new technologies. It was through their PG Labs division. I think it was a venture division. So, they own Gillette razors where you can make your own razors on the website, which they'll do 3D printing. Then you pick a blade and it gets sent to you in a few days, where now you could do, they adopted the Dollar Shave Club model where you have a monthly subscription for new blades, but it was just the technology was cool. And they had skincare products that were really awesome. It targeted psoriasis, it's over the counter, and products that help women during menopause and things like that. Just really new stuff, but the booth was really cool and just, just the technology and the focus, even through their division, was Oral-B with smart toothbrushes and stuff. I was just impressed that they see the world and know where technology going, where people, I don't know how many people are going to buy a smart toothbrush, but that's going to be the norm like 5 years from now, right? Everything that could be connected will be connected. And it reminds me of Intel 3 years ago when they were just behind the curve. And I came back from the CS and said, Intel just kicked ass. It was the best company there. And sure enough, that company's more than doubled since then. So I feel like when you look at Procter & Gamble, IBM, they're in the same spot right here where Procter & Gamble's a little early, but I love what they're doing, making it exciting, trying to get into growth trends because the consumer business is a very slow growing, dividend paying business. It's nice when you add a growth component. You want a good example? Look at Microsoft. Microsoft started getting into cloud. Look what happened to that company. It tripled in value. Before that, even though you want to rag on Ballmer and the acquisitions and the stock price, their earnings went up almost every single year, outside, credit crisis, stuff like that. But if you look at earnings going higher, the reason why that multiple didn't go higher is because they weren't in any growth markets, right? They're just, constantly selling, Office, new versions. Some were good, some were bad. Yeah, they tried to buy different things. LinkedIn's probably working out for them. Skype, I think, is working out for them as well, even though people ragged on that deal when they bought it, even though there was 10 people willing to pay like $7 billion for it, and I think they paid $8 billion. But, just getting more people to that platform. Anyway, not to go on and on, when you add a growth component to a large company, that multiple is going to go higher and higher. The fact that Amazon is in so many growth markets means they have a higher multiple because they continue to grow their earnings faster, their sales faster than everybody else, and maybe Procter & Gamble gets there. Intel got there. IBM's starting to get there. So that's a good way to look and buy good companies that pay a dividend with a growth catalyst that are dirt cheap right now. That's where I find some of my best ideas. Real quick, because we're running a little long here, smart cities, still an amazing trend since infancy. You got parking, lighting, irrigation, everything's controlled by sensors, which is saving the cities that have used this probably dozens now, millions and millions of dollars every year, just dimming lights, watering the plants at a certain time in the areas in the parks and stuff like that. It's just unbelievable. It's traffic lights to make sure you lower congestion, emissions, and stuff like that. Just start researching that. I'm not going to go over any names because I have one of the best in my portfolio. I don't want to give it away, but it's a trend that I love, and it's going to continue to be very, very big, at least over the next 10, 15 years. The technology for drones is getting insane, much faster, better cameras, more usage. I say more usage, for pipelines, agriculture, real estate. And they're also incorporating big data analytics along with cloud and AI to improve crop yields, productivity, returns. So AVAV, which is Air Environment, still my favorite name in the space, which is down off its highs. We took profits at, I want to say, close to 300% on this name, and we sold half of the position. And since then, it's down about 30% from its highs, along with the rest of the market. Did come back a little bit, but hey, they're still doing great on earnings front. They still continue to beat earnings estimates, still growing. But for AVAV, it's more of a focus of government than it is for individual and consumers when it comes to drones. Energy Cell Technology, a company called WIDEX, WIDEX, was using this technology to recharge its battery for its hearing aid. It took 12 seconds to charge it for 24 hours of usage. So I'm going to be looking more into the technology. Hopefully one day it can make it into smartphones, which I think is something that's revolutionary. If they could just come up with a battery that lasts for 2-3 days, I think everyone in the world would buy that smartphone, right? We all hate charging our phone like at least, once a day, twice a day, whatever it is. Kohler may have had the best presentation. Smart toilets, smart showers, smart bathroom, mirrors, faucets. You can play music, change colors. The faucet shuts off using your hands and works with Alexa, where you could say, Alexa, pour me 3 cups of water when you're cooking, and it'll pour you exactly 3 cups of water. The showers, everything was incredible. It's probably something you need to see. I took videos on this. Again, you can go to my Twitter account at Frank Curzio, because I'm not doing it justice explaining it. It's just something you have to see. Even the smart toilet that folds down, that looks, beautiful. It just looks like a little stand, and then it folds up, and then it comes out, obviously when you have to go. But Kohler really blew me away with their technologies, and that was huge. Echovacs is a company that has a window cleaning robot. So it just sticks to the window and it just cleans I thought that was amazing. I thought it was awesome. I mean, think about it. You're not going to see those guys hanging from 40, 50, 60-story buildings clean the outside of windows of skyscrapers anymore. I mean, I think that was a wonderful invention. They showed this big window, the robot just going up and down and cleaning it. When you think robot, think, Roomba-like, So it's kind of like sticking to the window and just going up and down and cleaning it all around. I thought that was amazing. Echovacs also has more than a dozen of their own Roomba-like robotic vacuum cleaners. In fact, there was at least 10 companies displaying Roomba-like devices, so I'm not sure if that's good news for iRobot. You want to check the percentage of revenue they generate off of that product. But there was a ton of companies and some really cool technology that looked like it cleaned better, that were cheaper. So definitely take a look at that. Wearables, hundreds of companies displaying watches. I mean, outside of design, almost all of them have the same features. Steps, heart rate, display text messages, have their own app and stuff like that. But I think the difference in wearables was digital health companies. So several companies tell to people who have heart attacks or strokes where their device can track your heartbeat at all times, send records to your doctor. I thought that was really cool. They had companies like Boston Scientific and other hardware companies in that industry where they have implant devices that use neurotransmitters to control your pain. So they test it first, and if it works and you like it, then they insert it in your back, in that fatty part in your back. It has like a 2-year battery life, and then it basically targets its neurotransmitters. So it's, controlling the brain that tells you have a lot of pain. I ask, pain is good. It lets you know that, something's not right. And they say the way they're targeting it is they just lowers the pain threshold of people in chronic pain. And I thought that was pretty amazing. I mean, I love those products. Robotics, real quick. I played a robot in ping pong, which I mentioned earlier, which was cool. It was awesome. I mean, it was, in front of, over 100 people, and it was really cool. I mean, it's just sensors, AI, robotics all together, and it was amazing. Like just playing this, it was really playing me, and it goes basically based on your level of play, and then it can match it and then teach you how to get better. And they don't sell this product. It was just displayed where, as a technology thing where this is what we use in automation and stuff like that. But that was kind of amazing. Tons of robots from Samsung and LG, which both of them have personal robots that they had displays. Again, I had a live video presentation on this on my Twitter feed, which was really cool. So, these things follow you around, do whatever you want. It was kind of weird and creepy at the same time. It was also cool. So definitely take a look at that. But overall, guys, listen, there's a lot of really cool things, a lot of good ideas. Also terrible things like the U.S. Post Office. I mean, taxpayer dollars, basically, they're there like every year now, but it's a pretty big display in the main area in the Sands Expo. And just there's no real technologies for it. It's just it's not something like, wow, you got to go use the U.S. Post Office now. It's just just disappointing to me. GoPro, they usually have a big presence there. This year they put their huge booth like in the very main area where you pay the highest cost, like near Panasonic, near same level as Sony and stuff like that. I mean, the major companies that I know spend millions on this because these displays are fantastic. Again, you see a lot of this in the live videos I have on Twitter. But GoPro spending a lot of money to be there, and the booth is crowded. And I know that their new Hero camera had got great reviews, but it's also, that Hero camera. I've seen similar products offered by a lot of foreign companies, Asian companies, China, Japan, that were cheaper, that kind of have the same features. But I was surprised they paid that much money, and maybe that's good or bad. But for me, it's a stock that I avoided because they don't have any proprietary technology, any special patents. People can come in and make the exact same product. And when you're a one product company, basically, that kind of scares me. So I always avoided GoPro and the Fitbits and stuff like that. Finally, some disappointments. No Gibson. Gibson usually has a big tent there, and they have live bands playing, and you could drink beers. Wasn't there this year. I don't know why. Under Armour this year wasn't there. Interesting. Very surprising. They're there almost every year. Last year, huge presence, very big, had some of the best athletes attend and stuff like that. Took videos of it. Some interesting things. Again, I'm not, promoting my Twitter account, but you're going to see an Uber taxi helicopter that's unbelievable that I have a video of. You have to see this thing to believe it. I mean, it's huge. It's amazing. It's got like 4 different copters. It's unbelievable. VR and AR, virtual reality, augmented reality, really a key focus this year, but incorporating it with big industries like building. So, pre-building stage, I can go in there and, say if I have, schematics, whatever, I can go in there and just look at it and change different things with the VR of things that I want to do before you're actually building or add on certain things during the construction phase. I tried out that technology, which is awesome. And the last thing, guys, is autonomous vehicles. Tons of car companies. I mean, displaying like amazing, amazing cars that you probably can't really buy. But I'm not a fan of autonomous vehicles. They're going all in on this trend, and I don't see this level 5 where everything's autonomous. I don't see it. I mean, there's people like me. I like to drive. I want to go in if I want to get a bite to eat or something, or, all you need is one guy like me to crash into one of these things and forget it. I mean, it disrupts everything. Whose fault was it? Was it this? Was it that? Where they think this industry is going, maybe it gets there. But for me, it's longer than 10 years. And you have self-driving cars and they drive around Vegas now and even last year. That's fine. But I'm talking about fully autonomous. And what they're starting out with, which you saw from Hyundai, what you saw from Kia, is these buses and mini buses that actually, maybe that becomes a trend first. But all these guys really get into autonomous vehicles. And I just don't see this being a major trend right away. Yes, it's a feature that you have and you can use on Teslas and stuff like that, and I get it. But just fully autonomous is different levels. Level 5 is fully autonomous. You don't have to do anything. I just can't picture people going into cars, sitting there for 2-3 hours and letting the car drive itself. I like driving. I don't mind driving. Some people do. Some people don't. I think this technology is good for working in the cities, in major cities. But the amount of money that's being spent on this trend, the parts and everything. I mean, the car companies are in trouble right now. Everybody has cars. They're affordable. I think people are going to continue to buy cars every single year, kind of like the iPhone. That's why you're seeing a lot of these things decline. But I'm just not totally sold on autonomous vehicles. I know it works. I've seen it works. I've seen this technology. I sampled it. But to go into everyone's household where your neighbor has a fully autonomous vehicle, I just don't see that happening anytime soon. So I don't know if I would tell you to buy any of the car companies. I mean, the chip companies are making money. The NVIDIAs and stuff like that, even BlackBerry OMX technology, they're making money because the big companies, OEM companies, are spending a ton of money to incorporate a lot of this and new gadgets and features into their cars. But when it comes to autonomous vehicles, I just don't see that happening right away. And I think there's going to be, big disappointments if you think this technology's coming around the corner in less than 5 years, because I just don't see it. So guys, man, I mean, it doesn't get better than that, right? You're just sitting home, doing all this work for you, kind of crazy. But I love it. I love learning new things. And that's what I start to CES. Again, Curzio Research Advisory members, you're going to get my next issue. I'm going to have lots of pictures in there, a place where you can go see videos, and I'm going to recommend the best company I thought that was at the CES. And again, it's a great company. Almost no one's ever heard of it. I'd never even heard of it before this. And I was just blown away by it. It's trading at a fantastic price. So if you're a Curzio Research Advisory member, you're going to get that issue on Thursday. So guys, that's it for me. Nice long podcast filled with tons of ideas. Any question and comments, be sure to email me, frankcurzioresearch.com. That's frank@curzioresearch.com. And again, please go to the Twitter @FrankCurzio, and you're going to see a ton of coverage, a lot of videos. And again, I don't care if you follow me, if you unfollow me after that, but just don't look at those videos and be like, wow, this is cool. Think of it as how you can make money off this. Where is this going to lead to? That's how you find the best ideas, by looking at different technologies and saying, wow, how is this going to be incorporated in other industries? Who are going to be the major players? And believe me, for me, that always leads to lots of ideas, especially in the tech space after I attend the CES. So guys, thanks so much for listening. Whew. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.